Okay, so as we all know now, I explained how to go about liquidity the last time that we talked. I explained the two things about liquidity, and now I will be explaining another thing. Then I will send the liquidity video I made it to you guys. So now, whenever you're analyzing, I told you if you join the Saturday backtesting class, even though you did not join, at least I explained a little bit to you guys here. I said, whenever you're analyzing, I'm coming. Whenever you're analyzing, please make sure you know your trading what? Your trading range. Make sure you know your trading range. From this low, from this high to this low, we have a trading range. Yeah, we have a break of structure. And this is a strong high. Why did I call it a strong high? It's what? It's counter liquidity and cause the break of this structure. So if you are looking for your range, you know how to go about it. Your range level. You're looking for your range level, you know how to go about it. Like I said, I don't want to see anything. I don't want to do anything. I don't want to have anything to do with this discount if I'm selling or the equilibrium. I want price to come into my premium zone. Now, after having this break of structure, price has taken out this what? External liquidity. The ERL, yeah, external liquidity. Price has taken out this external liquidity. And from external into what? To internal liquidity. You have drawn out your trading range. Now look at it closely. Where is your internal liquidity? The next internal liquidity. This is the last high here. The internal range liquidity. But you need to look closely also. Price clearing internal liquidity. If you have trendline liquidity, price will come back and clear it, but not every time, not immediately. Now look at this structure carefully. Look at it closely. This is another break of structure. This is internal break of structure. This high stand as inducement for this point of interest. This point of interest has not been mitigated. And you can see, you look closely, you have what? I think you have equal high, yeah. This on its own, for price not to mitigate this, you can see this move did not mitigate this. And this one was the one that haunted this one. It haunted this. Price need to mitigate it, and it has not been mitigated, and it caused the break of the major low, the major break of structure. Now, after price has taken out this low, this internal break of structure, price did not come back and mitigate this. Price move down and break this external range liquidity and move up. After marking your trading range, the next thing you'll be looking at is for price to take out the internal liquidity. So if price will be taking out the internal liquidity, where will you be looking into? Here. You'll be looking into this liquidity for price to take it out. And apart from you that looking into this high, we have this this equal, or let me just call it this trend line liquidity. Can you see it? Trend line liquidity. And where is the trend line liquidity engineered from? From this low, from this high. They started building the trend line liquidity from this high, from this area. From this area. Can you see the trend line liquidity? So price we have to take it out. and we have a major break of structure. Assuming we do not have a major break of structure, we can still keep considering the internal break. But once we have this major break, I want price to come and clear the internal liquidity after the external liquidity has been taken out. Now look at this. Price took out this high with weak. Price took out this high with weak and sold. But this point of interest, this place also, it's under liquidity and started moving on. So this pullback is going for the internal liquidity. So these activities that occurred here, from this low to this high, we have a trading range. So you have to mark it also. You are trading. This is a retracement. From this low to this high, you have a trading range, and this is the This is the discount level. This place has been mitigated. The imbalance has been mitigated. At the discount level, the imbalance has been mitigated. Then where is price going to? Price is coming back to raise this high. Because from external liquidity towards internal, so price is going to raise this high. If you are considering this place for a long sell, you are doing yourself, because price needs to take out the internal liquidity. These activities here, this only gave you a retracement sell. A retracement sell, of course. The main target, the main liquidity we are expecting price to read is this one. And looking at this structure, we have lower high, lower low, lower high, lower low, lower high. This low has not been taken out. Number one, it has not been taken out. Number two, it did not mitigate properly. It started building lows and highs. That means it started creating liquidity. And apart from this trend line liquidity, look at what they are building again. From this high, look at what they are building again. Because they know there are some traders that still want to sell from this area. Then they will kick them out. And apart from that, we have a buy side liquidity. Either you call it buy side liquidity or buy stop liquidity. Look at this liquidity here. Now, many traders, support and resistance trader, they will categorize this place as as a resistance. And they'll be looking for a short or a long sell around here. They'll be looking for a sell around here. That's for them. And there are some traders that will set buy stop at this entry. They will set buy stop. And their stop loss at the back, expecting price to start moving upward. So for traders that says buy stop here, this is trap for them. They're going to kick them out. Number one. For resistant traders that set their sell limits here, they will be kicked out. Number two, because this is buy stop liquidity, buy side liquidity. And this buy side liquidity also builds liquidity. Look closely. Here builds liquidity, here builds liquidity, here builds liquidity. Can you see? Look closely. And this was where the liquidity started engineering from. So price will have to come back and read it for this proper point of interest, because we have a major break of structure. We have minor break and a major break. So a major break of structure, the external liquidity has been taken out. Then we need price to come back to the internal liquidity. So this buy is just a retracement buy to continue the trend. You don't need to start looking for a buy to this high. No. Until this high, this range is being taken out. If this high is being taken out, then you can look for a further continuation trend to read the high. If you analyze it overall trend, the overall trend of this market is still a downtrend. But at least you are working on a shorter time frame. You can see I'm on 45 minutes time frame. If you should go to 15 minutes time frame, look at it closely. Now we have a buy here. We have a buy. The buy has been going. So we are expecting price to what? To clear this internal liquidity. Now look at it. This place has been mitigated. This place has been mitigated. This area has been mitigated. And we have inducement built. So everything they built here are liquidity to start trapping traders. You see some trader that will be willing to sell from here. It will only cause a short sell. It depends on the price action that happened around here. So it will only give a short sell because this will be the target. The internal liquidity will be target for the what? For the market. Price is coming back for the what? Internal liquidity. The internal liquidity is going to be the target because this area has not been mitigated. It has not been mitigated. So this was the internal liquidity created before what? Breaking the what? The major structure. So everything you are seeing here are just trap. So this buy, at least if you are buying from here, you take out your profits here. Of course, there are some times, I told you about how markets move. Markets move with liquidity. There are some times if markets move this rate this high, a long sell can occur. A long sell can occur to take out this low. Then price can do something like this, break this low, then later go back for the proper one. I'm coming, please. Then go back for the proper one, then move. Price can do something like this. But just know that everything here are liquidity. Trendline liquidity. Everything here are liquidity. From external liquidity to what? To internal liquidity. Let me look for another example. Oh my God. Let me look for another example. Okay, let me use this. You can see we have a break of structure. External liquidity has been taken out. And before this structure, where is the what? Where is the last high or low? This was the last low here. This low was the last low. Before price created this. So before the what? Before the break of structure, this was the what? Internal low created. This low was created after the BMS. This low you are seeing here was created after this BMS. So this was the last low created before the BMS. So this will be the what? Internal what? Internal liquidity. So for some traders that are what? That are willing to buy from here, there will just be a what? There will be a reaction to it. And for some traders that they think, okay, this has stand as inducement for this, there will also be a what? A reaction from there. Now, from here, from this low to this high, you should have a trading range. You should have a trading range. Now, this is inside your what? Equilibrium level, which was the internal liquidity. So price needs to take it out. And can you see what price did here? Price entered it. Price took it out. Can you see? So for some traders that are willing to what? To buy from here, can you see the reaction? Price was take them out. So price took this low out. This low is the what? Internal liquidity. So price have to take it out. This is the last low formed before the break of structure. So this one was formed after the break of structure. So this is the internal what? Range liquidity around this zone. This is the internal liquidity. So price needs to take it out. since was taking out the what external range liquidity, then you can see price came back for it. Price took it out and what start moving. So if you be buying, just know that your buy, at least you should take out profit around here. But the overall trend that we are looking into is a sell. So you need to start following the other flow. If you are looking for a buy, like you are looking for a buy to target this high, fine. If the overall trend is bullish, this is the high we'll be targeting. If the overall trend is bullish, this is going to be the high we'll be targeting. So this is a long buy. But don't forget that we have another high that has not been taken out here. This is a strong high and a weak low. So there's still many activities around here. We have internal liquidity, even though we are still bullish, even though we are bullish. So your buy, just know where to take your TP. That is where many people are getting it wrong. We are targeting this high, fine. Let's say this is the high you are targeting. We are targeting this high, fine. But you should consider these activities. This structure here. You don't need to omit this structure. You need to take note of this structure. Because price can come here and cause a break of this demand whatsoever thing. Price that can come here and raise this low and make use of this before what? Before going up. So whenever you are analyzing, know where to take your TP. So after marking this structure, fine, you are bullish because the internal liquidity has been taken out. Fine, you are bullish. Then if you are targeting this high, just know that you don't need to set your TP immediately to this high. You need to follow the order flow. So if you are taking out your profit, at least you should target this what? This buy side liquidity. You should target this place because this is an unmitigated area. It's under liquidity and broke structure. So this place is a strong area. So from this high to this low, we have a trading range. Because you are bullish, doesn't mean you won't look for what? Bearish trading range also. If there's this bearish structure, you still need to consider the structure. You are bullish doesn't mean you will not consider bearish structure. So now you know you have a trading range. You need to take note of this area. Because you are bullish doesn't mean you want to read everything immediately. So this area, until price take this area out, you should know this is the only activities. This is the only bearish activities here, apart from this area also. So you should know you want price to take this high out, then to confirm you what long bearish bullish market. Then this place will cause a short sell to continue your ride. Then you target whatsoever place you want to target. But because you are bullish doesn't mean you will not consider this structure, this ranging, this trading range. So if you are buying, you need to target this place first. So whenever you are analyzing, you need to mark out your structure, your bearish and the bullish structure, the internal liquidity and the external liquidity. So this area, if you are looking for a sale around here, you are doing yourself. Why did I say you are doing yourself? If you feel like this is an inducement for this area, I'm coming. It has not been mitigated though. So a short sell can occur from here, but not a long sell. Yeah, this has not been mitigated. This candle has not been mitigated, and it's built what? Liquidity, inducement. So if you are looking for a sell here, don't look for a long sell. Why did I say you should not look for a long sell? Look at this candle. Does this candle take out any high? No. This week did not take out any high. Number one. And also, buy side liquidity is resting here. Many stop loss are resting here. Many for buyers and sellers. So if you are buying from this area, you should be careful because this also builds trendline liquidity. From this place, there's a rejection. Price came back here, rejected. So this also built trendline liquidity. And this also built trendline liquidity. And you should notice what? this is your internal range liquidity that price needs to take out. So anything you'll be doing around this area, you'll be very, very careful. Even though you have this sell confirmation, you are not selling to take out this low. You are selling to the nearest unmitigated buy point of interest. Because price needs to take out the what? External range liquidity before what? Before any other massive movement. So if there's a sell confirmation here, just know this is a weak low. Price will take it out. If there's strong bearish confirmation around there, just know this is a weak low. Price is going to take it out because of this high. If you are bullish, doesn't matter. If price obey this bearish structure, just know this low will be taken out. Then after price take this low house, it can now give you another bullish structure. Then target anywhere you want to target. But you need to take note of this thing. You are buying from this area, doesn't mean you should now target. You can see this low has been taken out. This internal liquidity has been taken out. So after this internal liquidity, where are you targeting next? External liquidity. You are targeting this external liquidity, but not immediately because we have bearish structure inside. So this bearish structure can cause anything. It can cause the change of what? The trend. This bearish structure can cause the change of the trend. Then can make price come here around this other block or read this low before what? Before buying. So you need to take note all the liquidity. You need to take note all the liquidity you have in your structure. Now let me go to Euro USD. Now we have been bearish for a very long time on EU, and now a short buy is occurring. This is not a long buy. You know, I told you this sell that we have right now, the sell that started occurring on Friday. This short sell started from this breaker block. This breaker block caused the sell. This breaker block caused the sell. You can see price has not break above this. We have another unmitigated area around here. Let me go to 15 minutes. Now, look at it. This buy is coming from 4 hours time frame, point of interest. And this sell is also coming from 4 hours breaker block. Now, looking at this structure, it is coming from the 4 hours breaker block, right? Now we have amount of liquidity. We have amount of liquidity. We don't have a break of structure yet. Fine, this sell, I saw it today, but I did not trade today at all. So I did not stress myself on Monday. Now I don't have a break of structure. If I have the break of this low, that means external liquidity has been what? Has been taken out. Fine, this buy is coming from 4 hours time frame. Then this sell also is coming from 4 hours time frame. Now, will you be buying long or will you be selling long? Now, you bought from here. Let's say you bought from here. You have taken out your profit around that 4 hours breaker block. You need to wait until price take this high out before you should look for another buy. And overall trend is telling you is still a sell, which is this place that has not been mitigated. So since overall trend is telling you it's still a sell, you don't need to be rushing. Since you have taken out your CP around the 4 hours breaker block, you don't need to start looking for a buy anymore. Because from this high to this low, we have a trading range. Forget that it is coming from 4 hours time frame. This is another 4 hours time frame activities. And on the norms, we are bearish on EU. So this haunted liquidity and it started selling. If we have a break of this low, where is it going to be our internal liquidity? This high is going to be our what? Internal liquidity. This high is going to be our internal liquidity. Then this unmitigated week will be our point of interest. That is where we have a break of this low. But if you don't have a break of this low yet, you can still be following the internal break of structure. But if price break this high, you know this place has turned to a strong high. The reason why I said this place has turned to a strong high is because it wanted liquidity and started selling. See the sell momentum. So before I can look for another buy activities, I want this eye to be taken out. Then if price take this eye out, then I'll be looking into this area. Then this area should be my what? Internal liquidity. So I should be looking into this other block. Why this should be my what? Internal liquidity. This is what I'm trying to tell you guys. I'm coming. Now, if price take out this low, then this should start as my what? Internal liquidity, the unmitigated week for the next sell. Then I'll target here or this low. Or the unmitigated break. Yeah, there's unmitigated point of interest around here. So you can target this place at first. But better still you target this low. That's number one. That is if I have a break of this low. But if I have a break of this high, this should start as my internal liquidity for this, then to continue. So you need to follow the trend. Now this place, this activities is forming from 4 hours breaker block. It's under liquidity and started selling. So if you have a break of structure, that means the bearish moves still continue. So if you be taking out your profit, let's say you are selling from here. If you be taking out your profit, you should take out your profit around here or here. Because this will stand as internal liquidity. Everything here, this place will stand as weak low. Fine. But you should target this liquidity, this sell-side liquidity. It is either you target here, this unmitigated weak course. This is also untethered liquidity before breaking structure. It's untethered liquidity, yeah. So it is either you target here or this low. So the reason why we are doing ourselves is because we don't know where to put our TP. It is not every time you need to be targeting this low. It is not every time markets will be giving you 50 pips, 100 pips every day. Sometimes it can just be like 10 pips or 20 pips for a day. That's what markets would provide for you. So looking at this structure, look at this. We have unmitigated area. We have unmitigated area. We have unmitigated area. Fine, this thing is coming from from 4 hours point of interest. This is also coming from 4 hours point of interest. But because the bias is what? Is a bearish bias. Overall trend is bearish. So we have many tendency of what? Selling massive until we have what? A break of this low. If you don't have a break of this low, you don't need to look for a sell. And if you don't have a break of this high, you don't need to look for a buy. So here, they are trying to trap traders here. So if you are not patient enough, if you are looking for a buy, it might be when you are looking for a buy here, price is going to give you a reaction, then break. Then continue. And it might be when you are looking for a sell here, price is going to give you a reaction. So you need to be very, very careful. So marking your liquidity, this should be your what? Internal liquidity once you have a break of this low. This should be your internal liquidity. Then if you have a break of this high, this low, the internal low that formed before a break of structure, this low should be your internal liquidity for this other block. Are you guys getting me? Are you guys getting me? Are you guys with me?
Yes.
Okay.
Yeah.
For me, you can mix yourself back. Now let me look for another example.
Hello, sir.
Yeah.
Please, can you change the candlestick settings to green and red, please?
All right.
Thank you. Thank you.
You're welcome. So let me look for another example. I already used all this one to explain. So let me look for the one I have not used to explain. I need to go to another I need a clear break of market structure, a clear one. I need a clear break of market structure. Now, let's look at this market. We have ounce of liquidity. Did he? Let me look closely. Okay, yeah, it's haunted. We have ounce of this low, and we have a break of market structure. From let me say, yeah. If you use line charts, it's still inside. Yeah, the break is from here. Break of market structure. Now let's see. This is the break. The break occur from here. A break of market structure. Yeah, this is the major break. This one should not confuse me, because yeah. Or let me use this as well. Now let me use this line chart to explain. Like I said, from external liquidity to what? Internal liquidity. Now this external liquidity has been cleared. Where is the nearest internal liquidity? This is the only internal liquidity we have here. You can see the way price take it out. Price came back and what? It took this low out, this internal liquidity. Price took it out. Can you see? Price took it out. You know, I told you something. I said, if your internal liquidity or inducement did not have any point of interest, your area that you are looking for a buy did not have any point of interest anymore, that your liquidity will stand as what? Entry. That's what we call liquidity entry or inducement entry. Now we don't have. Let me go to here. Everything here has been mitigated. Now this inducement this week will stand as your what? Entry. Then you put your stop loss at the back. So price came back to take out this internal liquidity. The nearest structure, this is the external when the rating has been cleared. And looking at this, where is the internal liquidity? Let me go to the candlesticks. Now look at this closely. External has been taken out. This was under liquidity, did not break with full body. Can you see? It's under liquidity, then came back down, then move up. Now look at this trend. This one did not have any internal. This was the internal liquidity here. So price will take this internal liquidity out for the nearest point of interest. So this low will be taken out. And apart from this being internal liquidity, look at what they are building here. See this liquidity. See what they are trying to build. Trendline liquidity. So you can see buyers that picked buy here. They went up. They activated this trade here. They move up. Now there are still some buyer that will be expecting a what? A buy from here. Let's see. If there should be a, if there's going to be a reaction. Can you see what they are building? Trendline liquidity. So for buyers, another for another traders that what? That buy from this area. Now SFC trader will see this as break of market structure, and the other block that break the structure here. Now trendline traders will see this place as trend line at what? Break and retest, a break and retest of the trend line. Now we are in profit. So if you are buying from here as an SFC trader, now this is going to be a what? A sweet buy for you. SFC trader will be in this trade. They are going to pick this trade because of this point of interest. They saw this break of market structure. Then trendline traders are going to pick this trade also. Support and resistance traders are going to pick this trade also. Now see what they are trying to build: liquidity. Where is the liquidity engineered from? From this low, which is the internal liquidity. So as for me, I will not be buying. Let's continue. This low we need to be taken out. This was where the liquidity started engineering from. That created this trend line liquidity. So this low must be taken out. $130 30 pips. Then 10 pips on 45 minutes time frame. So let me try refine. Okay, that's it also. So this low must be taken out because it was the one that engineered this liquidity. It was the one that built all this liquidity. So these traders are in profit. Let's see if price will take them out or not. They're in profit, right? Yeah. Can you see? They're in profit. They are still in profit. They are still building liquidity. Another trend line. Some traders will categorize this place. CO, SFC traders will not categorize this place as strong low. Why? Because it's under this trend line liquidity. No, that's not it. This is the liquidity we are expecting price to come and clear. Not this trend line liquidity that are price under this trend line and start buying. No, that's not what we want. We want price to come and take out this place. Can you see? So this is another trap. And they'll be like unmitigated weak. A buy should occur from here. That's another trap for traders. We are going to have a reaction. Let's see. Can you see the reaction? Can you see the reaction? Can you see the reaction from here? Can you see the reaction? So now they have already cleared all the words, all this. What price is coming for is this liquidity. That's what price is coming for. See me see you verifying or why? I think it's here. Oh, this is no. Price should still come back for this. Yeah. Price need to take out this low or this imbalance. No. If we should go to shorter time frame, let's see, maybe we have our point of interest right there. Okay. The reason why price started buying, it's because price wanted this liquidity. This internal liquidity. Price wanted it and give a buy confirmation. So that's why price started buying from here. But I still want price to take out this low. So let me go back to my first 5 minutes time frame. So let's continue. You can see price has taken out this liquidity. So for trendline traders that felt like, okay, price will still come here again and buy. Can you see the way they trap them out? SFC trader, can you see the way they trap them out? And the final TP should be up here. Should be this. Yeah. Let's continue. Can you see? Final TP. Price entered this place and gave a buy confirmation and started buying. It's left here. Price did not mitigate here. Next time, if price is coming back, price can use this place as inducement. Now see the single structure. High and low and break of market structure. So price can use this place as what? Inducement for this to continue. I don't know. So can you see the way price took out this liquidity. It entered the liquidity, gave buy confirmation, and started buying. A sell. There's a sell confirmation around there also. Price entered this high, gave a sell confirmation, and started selling. Okay, let me call this. I don't have time to be playing. Yeah, let me scroll back because maybe I'm going to see it. Can you see? And price started giving structures. Now, see what I told you. See what I told you guys. You know, I told you that price can later come back here and use this place as what? Inducement for this. Can you see? Price make it as what? Inducement. So it has thought to be what? Internal, because we have a major break of structure. So this low, we thought to internal liquidity for this point of interest that has not been mitigated. If you understand the structure very well, as you can see, then the next high will be what you'll be targeting. Very sweet. A sell from here to the low. So any buy you are looking into here to just be a trap, because this is the internal liquidity for this. This is the main structure we are following. And this internal liquidity has not been taken out. So we need price to come and take it out. And you can see price took it out and start what? Buying. Target this high. So if you are chance to what? To take this trade. Now see, 220 pips. So it is from external liquidity to internal liquidity, and you need to take note if they are building trendline liquidity. You need to take note if they are building trendline liquidity. Now, this high is a strong high. Why did I call this place a strong high? It is happening from a what? From a supply zone. It is occurring from a supply zone. It entered this high and started selling. Now, look at this structure. We have a break of structure. All this liquidity will be taken out. The internal liquidity must be taken out. So you can see what I told you. I said even at all we bind to this area, you need to take note of this sell order flow. Even at all we'll be buying to read this high, since we are bullish. This internal liquidity has been taken out. Even at all we'll be buying to take out this high. You need to take note of this what? This bearish structure. And you can see what they are trying to build also. Building liquidity. So there are many tendencies that this place will be taken out for this. But note, you need to analyze to see overall trend. If this place is a strong sell to take out this low, price will come back and take out this low. And this is a stronger high on its own. See this week. So if I'll be selling this pair right here, this is going to be my entry. Let's say I've analyzed and I confirm that it is the overall trend is a sell. This is going to be my entry. My mouse will. Then my stop loss at the back. Then I'll target this low. Final TP. I'm just saying, if I hereby analyze and I see that it is the overall trend is what is a sell, and I get to know that this point of interest is very, very strong from higher time frame, I'll be selling from this area, from this zone to read out this low. But look at the way we pick our entry from here, and we know that this is internal liquidity, another buy. Oh, and these things here are internal what? Internal structure, sorry. A break of market structure, a mitigation, a break of market structure, a mitigation. So internal structure will be respecting their self. They will respect the order flow. But once they take out the external liquidity, internal structure will not obey again. What they are coming for is the internal liquidity. So even though you have unmitigated point of interest here, let's say you have unmitigated point of interest here, and you have internal liquidity to be taken out. Price will not respect it. The target will be the internal liquidity. You can see price is meant to respect this area. Let me zoom this for you guys. Yeah, price is meant to respect this area, but because the major high has been taken out, the weak high has been taken out, the target will now be the internal what? Liquidity. So all these internal break of structure are just respecting the order flow to take out this high. They start respecting each other, respecting the order flow to take out this high. Once price take out this high, price will come back and read everything. Price will come back, but only if this place is the what? Internal liquidity, then we will be looking into the nearest point of interest. But we should know that we need to target the internal liquidity, and you need to look closely if they are building trendline liquidity. Can you see? It's touch here, reject, touch here, reject, touch here, reject. This is trendline liquidity. So price will have to come and take it out. And apart from you analyzing it overall, the overall trend, you have analyzed the overall trend. Now, this short trend here, you can see price take out this. Sorry, don't mind my mouse. You can see price. See the way price took out this sell trend, this bearish trend. Price has taken it out. This is the internal liquidity after this BMS, and this internal liquidity has not been taken out. So the overall trend should tell you that the internal liquidity will be what price is coming for later, and you can see the way price come back for it. It came back without stress. So now, if you be trying to buy, just know you'll be trying to target this high, but this thing is also coming from another supply zone. So you need to take note. So if your overall trend is telling you this is a sell trend, just know that you'll be very, very careful of where you are taking your TP. So if you be taking your TP, just take your TP around this what? This buy side liquidity, and leave the rest for God or for the markets. Is that clear?
Yes, so
Okay. Any question, please? Any question, please? Any question from anyone, please? Any question from anyone, please?
No, I will need to rewatch the videos before.
Okay. That's good. That's good. Yeah, I'll drop it immediately I end this class.
Omut Badamosi, I think he's trying to speak.
Okay. Let me check. Okay. Okay. Any question, please? Any question? No. Okay. Let me stop this record. Then, the people I have
Hello,
to
can you hear me?
I'm with you.
Yeah, the trend line liquidity, is it okay? No, don't worry, I already figured it out. Don't worry.
All
I
right.
already figured it out.
So you can leave, please. So those people I have to wait, please, you can wait too, if you like.
But you don't, I just remember